What up, my devil? Sensei-tutum here with another video for you. So, this is going to be a public-facing video, and I'm going to try to do more of these. Did one last week. I accidentally shared the wrong link to Twitter. I just did the same video twice, one longer for members and one, and I thought it was too long, so I redid it for public and shared the wrong link to Twitter. So, yeah, if you got it off the YouTube public, it would have been the shorter one. If you got it off Twitter, it's the wrong one. But I just recorded. I'm going to do basically... typically, if I do videos for public, I end up, it's a private video as well. It's for the members. I don't necessarily, I do member-only videos all the time, but now I'm going to basically make public content more often. Let's just say that. So, and that way I can focus. I don't have to hold back on the private content. So I actually just posted a video that was like freaking 30 minutes. So if you're into that, talking about the top relative to the financial markets, the ES. So if you're into that kind of thing, you got to go over to the Discord, tradeevils.com. It'll be up for social or educational members. Social get a lot of value for their money, but they don't get everything. This one will be for both social and educational. Next week is going to be an educational only video. But of course, I'm going to try to keep pumping out this public stuff. So this one, and this intro is a little longer than usual because I want to sort of tell you guys what the plan is. But I'm going to try to keep them short. This one's probably going to be a little longer. You got to give me some feedback. If I don't get any feedback, I'll switch it up. This will be a little longer than I'm expecting because, as you see, there's no count on the chart because I didn't necessarily have a count at this degree updated in quite some time. So I'd like to do that. It's basically same Bitcoin. It's Ethereum. That's the way I see it. I've been calling for test the summer lows on Bitcoin for a long time, if you pay attention. So, not to toot my own horn. I'm just saying, like, I didn't need to update this. But I'm updating it today because a member sent me a account that was kind of shit yesterday and said, can we allow for this? And this video is really for him. I won't even get into the count that he showed. But let's just say there's no reason to ever accept, project into the future based on exceptions to rules. Let's just say that. So, I've been staring at this chart for a few minutes. Obviously, I see a chart, I see a count. And the most obvious count that we have is, we'll just draw it roughly here, something like A, B, C. Same Bitcoin, right? So if this has been the expectation, then, we can roll with a count that would expect that, right? And he said that the WXY is what he said is no longer relative. That was never the expectation, right? The primary expectation when you're seeing a sideways style of corrective is that you go from the most simple pattern to then advance to complex as you need to do so. A WXY sideways, double two or double three, triple three, those are triangle even. Those are more complex than a flat. So you start with your expectation of a flat. Agree or disagree, doesn't matter. That's just what you're supposed to do, and that's what I do. So the expectation has always been a flat here. The question becomes, because this didn't make a new high, that's where it confuses him. So he wanted to say that this was an impulse to here and have a weird count, but this would be a 4 relative to 2 here, overlap, and he wanted to excuse the overlap. I pretty much almost always never do that, and really, if you can't find a count that's decent, there's no reason to even have a count on the chart. So, a lot of times, like this low back here, especially for Bitcoin, like, you've almost never seen it. Like, I ambiguously dropped this A, because what's the point necessarily of, picking it out, right? Because, maybe that's a 1... Where's the low? So this is actually lower. So maybe 1, 2, 3, 4, 5 to there, A, B, C, or maybe this is the like it's a little more clear to be that on this chart. But sometimes it's just not necessary, and it's a waste of effort. So I don't necessarily put a count on a piece of chart that is shit because it doesn't help you. Use that information to your advantage. Think about the ways that you can use, okay, this doesn't have a high probable count on it. Maybe I can build up something contextually around it to where I can feel safe calling it, X, Y, or Z. But use it to your advantage. Uncertainty is, if certain uncertainty you know, if uncertainty is certain, you can use it to your advantage. If that doesn't make sense, then maybe I'm not the right guy to teach this theory to you. But you know, just because it's uncertain doesn't necessarily mean that you need to feel anxious, confused. You know, you have to sort of accept there's things in life that you don't understand always, and that's certainly the way in the markets. I don't understand a goddamn thing about these markets other than these, you know, these technical analysis methods. That's the only thing I understand. Anyway, and sometimes, and a lot of times, I don't even know if I understand that. So, obvious count at the larger degree, ambiguously placed A. So, and then within that, we're going to do an ambiguously placed 0, A, B, C at the lower degree. Switch up the color for you, make it pretty, because that's what sells, baby. Put some lipstick on this pig. So then, if the expectation is a flat, sure, it could have ended up being, you know, it would never have been necessarily a zigzag, because this would have been a zigzag on this side. So anybody expecting that this would have been a double zigzag where the B creates a new high relative to the A is, you know, barking up the wrong tree as is. So from this perspective, we can look at a few different things. But what stands out obvious to me is that we have this move here in an external retracement, sideways style, which indicates that we should potentially see a extended wave after, and then we see a big old move with no external retracement. I'll let you Elliott Wave experts. I'm not an expert enough to bother counting with this shit because I don't care. I really don't care at this point. And when this was playing out, I remember telling somebody, like, I didn't necessarily care because there was a lot of good trades within here, within the subwave structure, even though it didn't necessarily make sense as if you're looking at it for a wave 3, but that is a discussion for another video. Anyway, we have a big move here, no external retrace, you know, 3 swings. Clearly that down move is impulsive. Clearly this looks more impulsive. This is 3 wave to the move to the upside. And then this, you know, you could call this a 3 if you really wanted to, because this 4 is so slight, right? Like if you were looking at as it played out and you were calling for this to be the 4, it never made minimum price expectation. So it doesn't fit well as a 4 in play, but now contextually building around it, it's pretty safe to call that this does look, again, if you're going to say no, it's a 3 wave, that's you know, whatever fits you, right? It's because, but I'm calling this more obvious. I see two corrective subdivisions within the impulsive structure, right? So I'm calling this a truncated fifth. Just what's standing out to me, right? And it's a relatively big 4 compared to the 2 here, but you notice we get an atypical 1-2 sideways, right? It's not very typical. And then we have the sharp 4. So, you know, that doesn't off-put me too bad. And again, atypical truncation. So an atypical thing within an atypical thing, right? An atypical 5th wave within an atypical impulse makes sense. But what happens after the truncation? Exactly what you expect to happen after truncated 5th wave. A swift retracement, the length, at least the entire length of the truncation. So this is what really makes me feel comfortable. Now, in real time, I'm not calling that. I'm not calling that in real time. But contextually, now I can go back and do so, right? This is, now, maybe that makes me shit. Maybe that makes Elliott Wave shit. You be the judge, but, you know, I just think that if you're thinking that, because I think there's a lot, I think that most people out there that think that they know this theory and how to practice it are a little mistaken. They're close, but they don't. This isn't, you know, I don't think that this is a weakness of myself, because I have the, because I don't have so much bravado to say that, nah, I definitely had this as a truncation. Yeah, I mean, whatever. Anyway, not that I was necessarily charting this at this point. So if this is a truncation, we'll just go ahead and rotate. Just go ahead and rotate. You know, so when we just looked at it, obviously we went off the major swings. Let's go ahead and rotate this over to here, right? So then it all sort of falls together. 1, 2, 3, 4, 5. Oops. Let's go ahead and give you a really reasonably relative expectation of what to expect here based on just projecting out. One, 2, 3, 4, 5, 3, 4, 5. So this is correct at this degree. Let's go ahead. Let me leave that at minor. We'll go ahead and 1, 2, 3, 4. So we'll go ahead and put this in here. Not calling the bottom in here. It might, you know, there might be, it looks, move that down a degree, change the color. God, I hate the Elliott Wave labels on TradingView at this point. I've made that bitch before, but this sort of looks like we're probably in the 3. We're finishing the 3 of the 5, right? So because just what's the obvious swing patterns. So not really trying to call the low of the 3 here, but just the general expectation for what to do. So we'll assume we end down here somewhere. 2. All right. Doing this is making this video longer than it needs to be, but I wanted to give you guys a decently relative projection. From there, we'll just hit it with the 0, 3, boom. Just based on probable price expectations. Where does that end? Right in the area of the summer lows. Now, I know that there's a lot of people that also have incorrect assumptions about flats, and they say that there's a, well, we created a new high, so you really should expect the C to create a new low. Well, the projection does put it there. The projection within the C wave is where you get where you should expect to land, not based on the B, right? So I think that people get too caught up in running flat, expanded flat, regular flat. Listen, a flat is a flat is a flat. It's a catch-all term. Whenever you see a flat, just expect the B to end in the area of the start of the A. This one it exceeded, and the C to end in the area of the A, of the start and the end, right? So B ends in the start, C ends in the at the end of A, and that is a rough projection. Don't expect a don't think you're shooting the sniper bullet right through the center of the target when you're projecting for these flats. That's what you do within these C waves, like I just did right here. So this is, and I know that people like to get really into their projections and say my level's this, and yeah, it's bullshit. I hate to say it, that's all bullshit, but we'll go with this 1587 for right now. And whether it comes down here to 1300 or ends up here around 1900, so give that zone 1300 1900. That's what I'm expecting, and maybe we don't even hit that zone, but it does look like we still have some more to play out within this wave. I don't believe that the low is in. I think we have a little bit more time. Want to see exhaustion in this trend. 14 minutes, a little longer than I wanted to do, like I said, because I didn't have the count already on the chart. Let me know how you guys think about that, seeing me give it out in a little bit of stream of consciousness as opposed to having the count already on the chart when we start. All right, boys, that's it for this week. Toot out.